Something more than 1 million borrowers, like Nathan Jones, are feeling as they face the mortgage cliff.
For families like ours, you're very much a passenger on this mortgage journey.
Mr. Jones took advantage of low fixed rates during the pandemic, but now faces rocketing repayments when his deal ends. He says while they're financially secure, they'll still have to tighten spending and give up holidays.
Those things might have to disappear for a while you're having to contribute more to that mortgage with the increase in repayments.
More than 880,000 fixed-rate mortgages will expire this year, another 450,000 next year. The majority of new loans being written are variable at much higher interest rates. For families with big mortgages, there aren't many things left to cut back.
Oh, look, it's incredibly concerning. I don't think we talk about it enough. There's going to be a severe amount of whiplash.
His company manages $100 billion in home loans. And with almost half of the fixed-rate mortgages ending this year, Sebastian Watkins is worried about the impact.
It is a substantial shift. You know, you're talking about some people paying 3 or 4% more on their mortgage overnight.
There's also an increase in loans coming to an end, where borrowers aren't taking out new ones. This means they're exiting the property market, either moving back into rentals or in with family.
So I think that's talking to people that are dropping onto these higher rates and just not being able to afford the loan.
Financial counsellors say there's been a surge in calls.
And what would be your average income, do you think?
A year ago, people who rang the National Debt Helpline tended to be on lower incomes with debts on credit cards, buy now, pay later services and hire purchase agreements. Now, it's the mortgage belt.
We've had people who are in great jobs, they've got really good incomes, and now they're struggling to just pay their mortgages and the everyday essentials.
Ms Robbins points people towards hardship programs run by financial institutions and things like power and water companies that must provide customers in trouble with options for dealing with their payments.
Don't wait, get onto things quickly, talk to your lenders, talk to your creditors, get in as soon as you can. And if you're still having difficulty, call the National Debt Helpline.
More than 1 million Australians who've been insulated from the impact of rate hikes are going to feel it overnight. An analyst tipped 1 or 2 further rate rises. But there's a broader impact on the economy as well, far beyond these front doors, as people cut back on spending to make their repayments. Nick Moore's young family has had a preview because 80% of their loan was fixed and 20% has been subject to the rapid rise in rates.
I guess when you take an expense out, you think, oh, it'll fluctuate between 5 and 10% or something. But I never anticipated I'd be looking at, I don't know, 40 to 60%.
It's actually worse. Australian households now spend 106% more on mortgage interest payments than they did a year ago.
We're lucky that we'll be able to manage it through, but I feel for the other families out there that it'll just sink them. Like, I can understand why.
A sinking feeling from skyscrapers to the suburbs.